Hello, I'm Charlie. My microphone broke after the last video, so I'm a couple days late with this one. I recently bought real estate with an SBA loan, and this is a quick overview of how to go about getting a loan and the documents required. There will be two parts to it: the personal part, which is all about you as an individual, and then the business side. And the business side will include what you've already done and what you plan on doing in the future. The first document will be the SBA application, which would include the authorization to release information, which will basically state they can pull your credit report. Then there'll be the disclosure and notice of joint intent, which you would just sign saying that you are fully aware that if any negative information is furnished on your credit report, you have the right to look at that information from the credit reporting agencies. There's also the joint intent if you are filing jointly with other owners of the business. And the principal information form is a bunch of standard questions asking if you ever defrauded the U.S. government, ever went into foreclosure, or any kind of those issues, especially with the U.S. government. And then it'll be listing your previous debt, and this is also debt with the government. This will be things like student loans or any previous SBA loans, including the COVID, PPP, and EIDL loans. And finally, they will ask for a management resume, which is a standard template you fill in the box, basically name, address, and work history. The next document will be the Personal Financial Statement, the PFS. It's SBA Form 413, and this is kind of a standard document that even non-SBA loans will sometimes require. So it's good to have this filled out and ready. However, it does change frequently. It lists your assets and your liabilities, and for assets, it will list the cash on hand and in banks, your savings accounts, your stocks and bonds, your real estate, and any kind of automobiles or vehicles that you own of any value. Along with that, it will be the notes that you owe to the bank, and installments accounts, any life insurance payments that you're making, any auto payments you're making, any real estate payments, and any unpaid taxes. After that, it will calculate your net worth. And then it starts asking for more detail to explain each one of these. And the things like the stocks and bonds, those fluctuate, along with the cash in hand. So having this already filled out and being able to update it works out a lot better because you'll be requested one of these in the beginning, and you could get requested for it again depending on how long the loan process takes. For real estate, stocks and bonds, and even the accounts at banks, I tend to just list those out on another sheet, and on this form, right, see the attachment. On those other sheets, I would put it in some kind of spreadsheet where I could easily update it. And even for stocks and bonds where it asks for each stock, I just write the brokerage name. I would just put in like Robinhood and how much is in there. I don't break out what is in each one because later on in the process, you'll get asked to prove most of this, especially the ones that have statements or some type of document that can easily prove it. You could make up the value for an automobile and nobody will ever question it, but it really doesn't count towards having the funds available for the loan. Things like stocks and bonds, cash on hand, IRA, retirement accounts, they may ask to see statements for those. And then finally, they'll ask for your full resume, which is different than your management resume, only because it's whatever document you currently have that has your resume and not their standard template. Other than that, it's pretty much going to be identical with your work history. And the previous 3-year tax returns. They want to see how much you made or lost in the previous 3 years. Then they'll start asking for business information. The SBA does not like startups, so they're assuming you have been in business for at least a couple of years. They're going to want to see the articles of organization or incorporation, whatever your state calls it. They basically want to see when your company was registered with the state to get the initial date of when it started. Some SBA lenders are more lenient to startups, but for the most part, they want to see some kind of established history. Along with that, they want the IRS Employee Identification Number, which is the SS4 form, and the business debt schedule, a list of all the debt the business currently has. Then they're going to ask for 3 years tax returns for the business. They may substitute that with 3 years profit and loss statements or balance statements. They may want to see both of those. And then the current year-to-date profit and loss and balance statement to see how well you're doing this year. And this is more likely to happen the farther into the year that you are, not so much if you're trying to apply like in a January or maybe even February. So after those, which will basically prove how well your business has been doing up until now, they then want to make sure that going forward, you are not going to be losing any money or doing anything that could cause them not to get paid. They'll want to see the purchase agreement for whatever it is you're going to be buying, whether that's a business or a business and real estate. They want to see the detailed projections for 3 years, making sure that once you buy this business, you will have the funds to operate it for 3 years and what you see the revenue being, along with a business plan. The business plan should include the assumptions to projections, which would include how you came up with those numbers and what could affect those numbers, along with management, who's going to be doing what. This could be resumes, this could just be like a brief paragraph, along with operations, how you plan on actually operating and what you do to make money. So now they should have a clear picture on how well you are off financially, both personally and the business up until this point, along with how well the business will grow in the future after acquiring whatever it is you need the money for. Now they will ask for the same kind of business information again if you are buying real estate and you're holding that real estate in a separate LLC or a holding company. They want the same kind of articles of organization. They want the EIN number of just the holding company, the business debt schedule, which is probably nothing because the entity doesn't hold anything yet, along with tax returns, profit and loss statements, and year-to-date statements, which are also probably going to be nothing. Once you submit all this to your loan officer or business development manager, they will then submit it to underwriting. And while you gathered a lot of information up front, this will give them the chance to review. You are probably about halfway through. They are going to review everything and ask more questions. They're going to ask how you came up with your projections. They're going to question everything in the business plan. If you are buying an existing business and you can show that you will just keep doing what they've been doing, this becomes a whole lot easier. But if you are buying a building or you're buying something that's going to be slightly different under your control, you have to start answering all their questions. This could be a series of emails, or you could be on a conference call trying to explain everything. Once you explain some of this stuff, they will ask for more documents to prove that. This is when you're going to get requested for the statements for everything on your PFS. You are going to get requested for documents that have leases. If you are renting anything out, the leases that you give to the tenants. You cannot lease more than 49% of the building that you are buying, however. But if the building that you were buying had leases with it, you can show that as some income. If all this goes well, you are then issued a commitment letter that basically lays out all the terms that must be met in order for them to actually loan you the money. At this point, they are going to be asking for a whole lot more information, and you will start submitting some of this again that's updated. This will be like an updated tax statements, updated year-to-date statements, and the updated PFS. So when you first make them, if you can keep it in an editable format, makes it a whole lot easier as this goes on. I was always told that this could be done in about 30 days and have never been able to do it faster than 60 days. Something always hangs them up. You'll get random things like reports back from the Attorney General may have some other information on it about you and your tax payments. It may or may not be true, just depends on how good your Attorney General is. Sometimes you don't actually have to clear those up. You could just submit a statement that says, I have no idea what this is, but I can look into it. Other times you actually have to get the Attorney General to sign off on it. Then a lot of other things will just fall through the cracks, like getting appraisals or getting kind of property surveys or doing anything else that the bank was supposed to do outside of your control. Just delays everything. But Once you made it this far and you got the commitment letter, all you are doing is trying to satisfy that commitment letter, but the bank has agreed to lend you the money. I will try not to be late on my next video, and will make a future video going over each of these documents along with the templates that you could just fill in so that you can get an idea of how much work this would take if you wanted to go the SBA route. Until then, like, comment, and subscribe.